What's up guys, Anele from Forex Pro International. Today I'll just be doing a quick video on this one of the simplest methods of actually trading, which is support and resistance. But before I head on over to this particular chart right now, I just want to say a couple of things regarding trading. Okay, as everyone might know that has actually done trading before, it's not as easy or as simple as people make it out to be. But like I always say, with a proper trading plan and risk money management and a decent amount of psychological stability, so to speak, it is something that you can draw money from on a consistent basis. However, like I always say, man, it's always a work in progress. So with support and resistance, usually I just use a horizontal line, which can be found over here. This is a draw horizontal tool. You just click it and you drop it on wherever you actually want to drop it on. You can double click, customize it, do whatever you want with it, but I have a video that explains all of that. So today I just want to briefly give you an idea of what support and resistance really is and how you can actually incorporate that in your trading if it's not part of your trading already, or it's something that you can look out for because it can play a role in terms of actually taking profits or giving you additional confirmation whichever trading that you might be looking to enter in. All right, now support, I just call it the floor. That's how I was taught, and resistance is usually the ceiling in the market. And for instance, this part over here, this particular section of the chart, you can see the corner here. This is the highest point that we see on this, so this is the peak of the chart, and this candle over here, this is the highest point that we might see. However, in support or in resistance in this case, we basically have some sort of subjective hold on the market. So you can either put your resistance right at the edge of the wick of the candle, or perhaps at the edge of the body of the candle itself. Okay, so that is totally dependent on how you actually see the market, because in some instances you might put it over here and it might not actually reach this particular level because of perhaps the contracts, you know how it is in terms of the financial institutions, how they actually aggregate all their orders. So probably trying to avoid this particular level means they're going to move away from it without touching it. So in a lot of the times they might actually run right through it. The market might run right through it and then experience a bit of selling pressure and then just drop back down. So in that instance, that's usually what's called a stop run, where perhaps either a broker or the market makers themselves, they're actually running stops to catch all the dumb money, as they call it, right? So that's basically how you'd actually see that in a chart. It's evident in these wicks over here, these pins. They're called wicks, they're called pins, they're called shadows, whole lot of different names. And Swiss franc, euro kind of pairs, they're actually infamous. This is the most infamous chart that I've ever come to experience in terms of the pins themselves or the wicks. So trading support and resistance is actually quite simple. If, for instance, you get a price movement over here, this is a pretty large movement, and you can also incorporate this with supply and demand. You see a nice strong move down. This is one push candle. This is on a 1 hour time frame, and it drops down, bottoms down to this particular level over here. So you can see that wick actually ended over here. However, the candle itself closed right there. Okay, so when price pushes back up, okay, it's basically, when it comes to supply and demand, it's dependent more on the aggressiveness of the push. Okay, so if price wanders away from that particular level, then it's not quite a strong support level. However, if price moves with aggression, nice big candles like this, then that would be described as a demand zone, so to speak, and then price just rallies. And when it does return here, you'd expect more or less of the same thing. So you put this horizontal line over here, so that being your buying zone, so to speak. Okay, now I know I'm just stepping on the supply and demand zone more than I am actually doing the support and resistance level, but it is basically more or less the same thing. I incorporated both within my trading in my beginning when I actually started out, and it did quite work well together. So this would be your buy zone. Okay, let's mark it off as a particular zone, and you know that every time that price comes into this particular level, you're looking at buying, right? So when it comes here with proper confirmation from whatever indicator that you might be using, the candlestick formations, then you have a pretty decent buy level, buy zone. Likewise, let's say here at the top, perhaps you have this. This is the highest point that you have over here, and this is the last bit of consolidation zone that you probably had over here. And you insert your horizontal, your rectangle over here. You highlight this as your sell zone. So when price looks here, you're looking for resistance signals, you're looking for some sort of pin bar reversal, you're looking for some sort of evening star, yeah. So you're looking for some sort of reversal signal or confirmation, and once that basically does happen, some even a double top, double bottom here at the low, at the buy zone, and you probably could even label that. So you label that say sell zone, and then you just simply project where the market is. Now the big advantage in actually letting that happen is that you wait for the market to actually come to you instead of having to chase the market, because a lot of people tend to chase, myself as well. I was very guilty of that in the beginning stages, and chasing the market just isn't the way to go, because it's gonna lead you anywhere. So it's gonna pull you up, pull you down, show you buy, show you sell. But if you have a clear bias, obviously you need to couple this with a lot of other things that will help you to understand, or to have a clearer picture of where the overall trade should be going. And once you have that in place, you have the proper mechanism as well as the trading plan to confirm all your entries, exits, your risk. Once you have all that in place, then you have a decent trade. Now you can go on through to the website, www.fxpro.co.za. Might have rushed that a bit. www.fxprosa.co.za. Yeah, you can check out my blog. Haven't been writing much lately, but definitely coming up with some new stuff. Hopefully this will help. I'll be putting out a video every single day for the next month. So ton of stuff. So if you're already sick of me right now, then you have a long way to go. Yeah, thanks guys. Cheers.